Hello, what's up, guys? Welcome back to my YouTube channel, Happy Boys FX. So today we're gonna teach about best trading time section for forex routine. So I'm gonna show you the way we normally take trade based on forex trading sections. So we have four trading sections, which is the Sydney, Tokyo, London section, and the New York sections. Yes, the London and New York section, I'm gonna focus more on the London and New York section because that's the best trading section which any forex traders or any forex trader can execute their trade on, and that's the best time to execute your trades if you want to make a good profit in the market. By our analysis and our market structures and other confluence with them, you can execute trade both on your confidence zone and your psychology levels. So let me analyze this little market. This is the previous data that the market released, so I want to use it for a trading tutorial for today. So what am I doing based on this is that I want to show you how we normally take trades with the once the New York section and London sections are open. You don't need to trade all time. You need to be following. You need to wait for the sections to open. Don't trade if the sections aren't open. So let me show you guys the way we normally take trades based on our analysis and other things. Is that so for this I'm gonna show you the Asian range indicator for the market. Is that once the market has closed for the day, you can see this green vertical line that was drawn here to this zone. You can see from here, this is 221.30, closed here at also 21.30. so these are the sections. You can see it here, the 21.30 still close at 21.30, so it's closed at 21.30. So what do we do once the market is closed? Once the market is closed, that we want to see the Asian range sections. And the Asian range sections are like the liquidity in the market, are like where the market has stored liquidities, you understand? So what are we planning to take? Is there is not that you wake up in the morning, you take trade. It depends on wherever you are. So luckily for me, that in my country we wake up in the morning by 7-8, so our time correlates with London sections, which is the morning section trade. If you want to trade based on our London sections triggers on by 8 o'clock, or you can go 8 or 7 o'clock. It just depends on at the time. So why New York sections opens by 2 o'clock also. So what do we do as a trader is that you don't execute trade, and you don't execute trade anyhow on fake moves. You always execute trades. I'm just giving you these tips for you to master your strategy, or for you to master when to execute trades. So, and also you don't leave, once you execute trade, you don't leave trade on one section, unless if you are a swing trader. One section or two sections is only okay for you to make profit of the day, because the market once it reaches to London section, it moves away and then come back to mitigate zones before going up again. So what do we do as a traders is that once the market is closed, you want to see this liquidity, you want to see the Asian range. Once the Asian range is stored, you want to see the market push up to break the low of the Asian range. If it breaks the high, then you know that we are going to sell for that day. If it breaks the low, you know that you are going to buy for that day. It just depends on where the Asian range has broken. This will give you kind of confirmation to know where to take a trade. That's number one confirmation. So what next is that you need to see that you need to make sure that your trend is breaking. Your trend is broken. Sorry. Once your trend is broken, let's say you are going lower lows, lower high, lower lows, lower high, lower lows, lower high. This is the high and this is the low. This is the lower low and this is the lower low. So you want to see a sharp move. This sharp move will create an imbalance. It creates an imbalance. That imbalance means insufficient price created. So what is the next thing to do at that moment is that you want to wait. Even though it was the other day that the market did this kind of formation, so what do you want to wait is you want to wait for the retracement or pullback of this trend. So what next do you need to do is you need to find the other block. Based on this zone, we have two other block zones. This one here, but I'm not gonna mark it because the candle pushed inside this this other block here. That's why I drew this overall other block. So what are you waiting to do is that you don't take trade on Asian range to the Asian range is broken. Let's say this is your other block that you're waiting to be triggered. You need to wait for the Asian range to be broken, which is this low, the low of the Asian range. So what is the concept behind that is that liquidities are stored here. So retail traders, you're trying to buy the breakout, which is the SR flip days, your support or your resistance. Okay, your resistance becomes your support and they start buying from here. So what does the market do is that once they start buying, they place their stop loss above these levels. So the market should chase back, give them a more entry confirmation with double top confirmations, all those their patterns. Then what does the market do is that it consolidates at this range. So before the London section starts, what does the market do is that they manipulate them, push out their stop losses. Once their stop losses are out, they will trigger the other block, their orders that they have left before they move. And this is like their footprint, which this is what you always look at. So what you do as a trader is you go to your lower time frame, your 15 minutes, your 5 minutes time frame, look out for the same pattern, your choke and everything. Then you can see that after the movement of this is about 90 pips or more than. Then at the New York sections came back at this zone, which is the 2 o'clock at this zone, and mitigate the other block, the first other block here. Then they pushed away again, which you can see how many pips the market move. I'm gonna show you. Because why I'm teaching this is because this is the way the market behaves every time. You don't need to be trading in the night or when you are supposed to be sleeping. You'll be trading, looking up for setup. That's not the way market works these days. You enter, some movements are triggered on London and New York sections based on wherever you are. So this is about 90 pips, I guess. So this is about 90 pips, so you can collect your profit wherever you want. So what's the other one? The other one is your New York section. You can see about how many pips it moves. So it's about 100 pips. So this is great. So the same thing is happening every time, every moment in the market. So this is like a second example that I'm trying to show you guys. Always look out for the Asian range consolidation, because that's where the liquidities are. And you can see this zone that we had a break of market structure here, which is our high. The market chased, put back. This is where the retreat traders start buying. So what is going to happen is that I'm not trying to predict, but I'm trying to tell you what normally happens every time in the market is that and their stop losses are above this level, and that's why I marked this symbol as a dollar sign. So what is going to happen is that the market will push, and neither the market will push to hit up their stop losses, and once the markets are pushed to hit up their stop losses, that's when we confirm for a change of three. The market break, push at their stop losses, trigger here, then we go up. Once it goes up from this zone, it will still react because we have a supply zone here that the market is respecting. So what does the smart money do is that they trigger these orders here, push out their stop losses, and when do we trigger these stop losses is at the New York and London section. You can see this by today, this morning, the market might push out by 8 o'clock. It will reach here and trigger and then go up by 14 o'clock, which is the 2 o'clock sections. The market can reach here and start pushing down again. So these executions normally happen in London and New York sections, and those sections are most volatile sections in the market, which whenever you are trading with them, you got to be careful and consecutive in trading. So these are like a tip that I want to give you, that you always trade with your London and New York sections. Other sections are okay depending on the pair you are trading. If you are trading any pair based on dollar pairs, so you'll be watching out for these Asian range sections, executing your trade on New York and London sections. So if you haven't subscribed to our channel, please don't forget to subscribe and turn up the notification bell.